This is David Patrick, Fitzstock Charts market video update for March 6, 2019, and we are in no trend. We've been spoiled. Spoiled to death. We had 11 uptrends in 2018. It was our best year, nothing even compared to it. And we had some good years before, but last year was phenomenal. And then we went cash before the market collapsed. I went all cash and posted it in October. And then we hit a bottom, and then we had a 40-day uptrend where all we did is make money. It was almost like it was just an ATM spitting out money for us. And now what? If you remember the whole way up what I was saying, wait for price strength confirmation, add, scale. Wait for price strength confirmation, add, scale. Use stops on runners, don't pick stops. Don't pick tops. Use stops on longs. The whole way up. So we'll get to in a moment where some of your stops might be. What did I do this week? I lightened up. I lightened up my long market exposure from being long from 40%, 80% to 130% back down to 80%. It doesn't make me bearish. What it does is it pays myself. I'm able to pay myself by booking these profits. It's giving myself plenty of ammunition, ammo for new trades, just like today with Facebook, right? And now I have to wait. I have to wait to become aggressive again, aggressively long. And it's a patience game. I've always said patience is the hardest trade. When I see people hitting me up with emails or Twitter, what do you think about this, that? We're in no trend. What do I think about this, that? I don't think about it because we're in no trend. What should you be doing in no trend? Sitting and being patient. At most, being trading half your normal trading size. At most. I don't want you guys to give up your hard-earned profits. Now, it might not seem hard-earned because it was on easy street for 40 days. But it was. Because now comes the harder part. Anybody can make money in a raging bull market like we just did. Anybody. Now, we hit it out of the park, and we'll get to that in a moment. But the hard part becomes the patience trade. When we go into no trends, what to do? When we go into downtrends, like we did in October, what to do? I went cash. Some of you freed up some cash. Some of you went all cash with me. All depends on your risk profile or trading time horizon. I talk about that all the time also. But let's get right into everything. So we still have, to me, I'm 80% long market exposure. And we're in no trend. We might even go to a downtrend today. Wow. We're still above key moving averages. I don't use the 50 to put on a trade. I don't use the 200 to put on a trade. But we're comfortably above both. When you're above both, you can stay long versus your stops, which we've talked about now for 2+ months. So I'm still 80% long market exposure. I came into the week 130. You saw me scale on the Monday gap up just like I did the Monday before. And then I scaled more throughout the day with UDOW. I booked all the profits in UDOW. And that's where we are. So I'm being patient. We talked about, we were prepared for this. If you go back and you look at the weekend market analysis, charts where you sleep about week 9, and you look at that, and we talk about. Well, I know one thing we did talk about, like we always talk about, is the week before option expiration, the week before OPEX. Many times it's a pattern that developed that we hit some sort of pivotal low. This week. So someone had mentioned on Monday, we saw a gap up, a pullback. We went red. Then we saw some volatility, 50 handles off the high. Someone had said, well, could we put in the lows on Monday? Well, absolutely, you can. But going into this week, you knew there was a good chance there was going to be some kind of volatility. It doesn't have to happen. And that's why going into this week, I had 130% long market exposure. I wasn't going to base my trades and investments on that thesis of a pullback this week. I let the market tell me. It was a free money gap up on Monday. I mean, just once again, it's an ATM machine. When we see a 10, 12, 15 handle gap up, all it is you go to the ATM machine. If you're not taking out the money on those gap ups, guess what? The next person in line starts taking them out. All right? Learn from your mistakes. Scale on gap ups. And then what happened after that? We broke trend. That's very easy. When you break trend, you start freeing up some cash. You pull back the throttle. Friday, non-farm payroll, and that's event risk. there's no reason to talk much more about that because we don't trade earnings, we don't trade the Fed, we don't trade non-farm payroll, we don't trade economic numbers, politics. There's none of that stuff we trade. Try to stay away from event risk days. You don't want to trade an earnings day on Apple. You don't want to trade a Fed day. You don't want to trade a non-farm payroll day. At least you don't want to have big size going into that. And you certainly don't want to trade at 8:30 futures when the economic data comes out. But anyway, with that said, 90% club, these are unheard of results. Go ahead, Google search it. See if anything compares. You can go to every advisory service out there, broker, any kind of service. There's so much garbage out there, and I'm not trying to downplay. There's a lot because there's a lot of garbage out there, but you're not going to get these kind of returns. We have defined risk with the ESFL, our engagement spreadsheet focus list, and we've hit it out of the park. We've batted around 900 this year, which is unheard of, and we've had 65 different options that are up 90% or more. Some are up 200, 300, 400%. 65. We've only had 6 weeks in a year. That's 10 a week. That's 2 a day. 2 options a day doubling. Unheard of. 21 triplers this year alone. 1,009 different options that are up over 90% since we launched the service. I think it's under price pattern now on the website. Historical chart pattern comparisons. Got a bunch of them up there. I'll probably have to update this week some of the ones that we've been using. 1980 historical chart pattern comparisons. I don't like to keep our current analogs out there because there's public access to that part of the website. I don't like to give any of our private data that we're trading available to the public. So the 1980 historical chart pattern comparison I'm not going to put up there. We were looking at 2001 for a while. And we did that Xilinx trade comparing it to Apple. Currently, I put on a Facebook trade. I'll show you a reason why. I think I showed you that before, historical chart pattern comparison. And here's the 1980 historical chart pattern comparison to 1980. 1980 SPX on the left. Let's change this if I can to 20 year. And then magnify it a little bit here. That way the moving averages can show up a little better. All right, so it's not identical, but you can see a bottom happened. Ours just happened to be a witch hat bottom. This was more of a higher low. We came through the 10 SMA. We started getting volatile. We got volatile. We broke the 200, broke the 200. Right back in here, we're diverging a little bit from this pattern. And once again, all patterns are not identical, and they eventually all will diverge 100% of the time. When we got above here, we both flagged above the 10 SMA and kept going. So I don't really think we're in this part of it. And by the way, we could be totally divergent from this pattern. I'm not trying to become overly bullish. But more importantly, I'm a MACD guy. If you saw right here, when we saw the MACD bear cross right here, the MACD bear crossed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It took 11 days after the MACD cross to really start reconfirming the price strength and moving up significantly. 11 days. Since our MACD bear cross happened actually here, 1, 2, 3, 4, 5, 6. 5 more days, and we're on Wednesday, so it's possible that we see some kind of pivotal lows this week. Could be today, could be tomorrow, could be Friday, whatever. And let's magnify this a little bit. Once these lows are in, and if we do see, this type of action, we could probably start raising our stop from here to maybe here. And if we do start seeing price strength confirmation, then finally we could start raising stops to here. But let's one day at a time and see how this goes. I currently think we've diverged a little bit from this pattern, but this pattern looks very similar. But unfortunately, this is when you saw the golden cross, the 50 through the 200. So 529, 2 weeks of the 50 moving average moving up, 2. Yeah, it's about, if you throw out this moving average, the 50 of the 200s, if it was up here, it'd be much easier. It's not up there. But you can see the 50 moving averages moved up for about 3 weeks before you got into this consolidation. Our 50s moved up for about 3 weeks before we got into consolidation. You saw the MACD bear cross, MACD bear cross. So although it's not an identical pattern, this part of the pattern is. And you got into this wedge up here, really sloppy, which not surprises Thursday, Friday before OPEX, going in non-farm payroll. But I'm not going to give up on that. As long as this 200-day moving average holds, and I would say specifically here, I don't even know if we get down that low, 27.31. But as long as 27.31 holds, or the 200-day, and if that happens and we get back above the 10 SMA, although it could get choppy like it did in here, I think that's still going to be a bullish consolidation. So let's take things one day at a time. Today is an ugly day. Okay, it's not an easy day to trade. I trade Facebook very nicely, and we'll talk about that in a moment. But it's not a great day to be picking tops and bottoms, because we'll look at the ES in a moment. So let's change this to Apple and change this to Facebook. And once again, these patterns are not identical, but you can see at least what I was looking at, because where I entered, Facebook was different than from when it engaged today. And well, actually, I did both. I day traded and then put it on swing count. So I did a bunch of Facebook trades. Oh, I wanted this to be Apple over here. And let's change things up. I think that was back. That pattern was back in here. So let's blow it up a little bit. You saw an avalanche. Facebook's on the right, Apple's on the left. Some kind of avalanche on both, right? Once you broke above the 50 SMA, you blew up, and you blew up here. You saw some sort of MACD bear cross. You can't really see it that well here. If I blow it up, you can see a little bit better. And, that's a little bit deeper of a MACD bear cross. When you started to gap up and get going and break a downtrend line, it didn't work right away. It didn't work. Like if you drew the downtrend line, it paused here, paused at old highs, even got real choppy up here. If you gave this thing some time, multi-weeks, it could really turn into a home run trade. Now, does it have to? No. Obviously, it's same thing as we always do. We define our risk before our entry, right? So if you do get long, use the ESFL stops or use the previous day's low as your stop. So that low, 166.55. I put some options on going into next week. So I'm a risk taker. That's what I do. I take risk. But we had rules of engagement right here. So you can, any day, any time, you can take it. These last 3 days, you had rules of engagement above the 10 SMA. Just so happened to engage today off the ESFL. So depending on where your entry is, whether you're green or not on it. Well, let's pull Facebook back up here. All right. So you have this opening candle, and obviously using our 5-minute rules of engage, you have to wait till above that candle to get long. Okay. So this is Facebook. Okay. So you come up here, you scale. By the way, if you're trading, you wait for 1%. If you're day trading, you can wait for less. If you're day trading in an up or a no trend and downtrend, you're scaling even quicker. If you're trying to day trade, I mean, the odds are not in your favor, right? So you scale, you get stopped at your entry, or you get stopped at the low of the day. No big deal. Break another downtrend line, rules of engagement long. I can't remember where I posted here. I was not using 5-minute rules of engagement. I was using the daily. I was using the historical chart pattern comparison to Apple, just like I did with Xilinx that I hit out of the park with. And I don't know if this trade is going to be the exact same, Yahtzee, Mammoth, Grand Slam home run. I have no idea. The bottom line is I posted it live, I took it live, and I scaled it live. All right, and I'm using the previous day's low as my stop. I think I bought those options at 385. And yeah, if I get stopped the previous day's low, they're probably going to go down to $1. But I've also scaled 3/4, right? So I only have 25% of the original trade on. So if it works, it works. It doesn't, I'm almost risking the house's money after, scaling profits. I'm not really risking that much. Very minimal. But so for a day trade, yeah, this is not a great day trade. I mean, even if you didn't have ROE to day trade along there, that's not very much. You didn't make very much there. So for a day trade, this was, I think when I day traded, I made a little bit, and I think it ended up being a wash because I got stopped down here. But then when it got down here, and I looked at the historical chart pattern comparison, I'm just like, you know what? It meets my risk profile, my trading time horizon, and I'm going to speculate. I'm not going to put on 1,000 calls or 50,000 shares. I'm going to speculate with some calls. They just happen to be, barely in the money calls going out the next week. So it either is a good trade or ends up being a trade that didn't work. But the most important thing is I had rules of engagement on the daily, and I posted the trade, and I scaled the trade. So the risk is off, essentially, especially going into this week and Friday's number. All right, so what else do I want to talk about? Oh, ES. I don't know. I think I had some ES trades on. Yeah, I did. I didn't make very much in ES today, I'll be honest with you. I'm looking at my P&L, and I had a very nice day with Facebook. I traded it like 4 or 5 times and still have, 25% of those calls on. But the ES, you know what? I think about $500 or $600 on ES. I'm looking right now. So I didn't have a great day trading ES. I don't know how to dissect this as far as where I traded it, but obviously, and someone emailed me, do you have rules to engage short the spiders? Yeah, anytime you're below the 10 SMA, you can engage short if that meets your risk profile, your trading time horizon. But also, when I answer that question, I always emphasize you do not have to trade short. You do have to trade long in uptrends. All right? So anyway, here's the ES. So breaking an uptrend line, rules to engage below the 10 SMA, scale, stop at entry, or you can keep your stop up here, or you could keep your stop at Globex highs. And that would have been, I think, pretty close to Globex. I think that might have been Globex highs. So the shorts worked. If you were trying to trade long, you barely had rules to engage there. MACD was barely curling. You were really fighting for a trade here. Break a downtrend, you go into an uptrend, MACD bull cross, 2780 to 84. You got one scale, and you lost on the rest. And let's see here. You can get long until here. Once again, we just went from a 4-day uptrend where it was very difficult to short a market. You can see as soon as you go into a no trend or a downtrend, it's much easier. I'm not saying to short the market. I didn't short the market. And I don't think anybody should because I don't think you have to. But if that's your thing, you're a bear or you like to short the market, you have your rules of engagement. And when we're in no trends and downtrends, they're going to pay better, right? So the shorting worked here. The shorting worked here, right? You had your rules of engagement right there. Scaled, stop at entry, stop here, or stop at Globex size, wherever you want it to be. The shorting is working. Now, long, like I just said, it didn't work very well, but just looking at the charts here, we're hitting a low on the day without MACD. So you have some bullish divergence. Last 3 of them really didn't work. It just wouldn't surprise me, and I don't know if the lows are in, that, if you get back above 27.77, that you might see a squeeze back here. That would make probably actually pretty good sense. And then revisit these lows tomorrow. So does that have to happen? No. But you do have some bullish divergence here, and if you tried the last 2, you paid a little bit, lost some, and I don't think you get scaled here. I just think maybe this one works better because you do have some bearish divergence or bullish divergence. You had some bullish divergence here too, so you could make a case that if we do get above here, you got your double bottom, and you're starting to, in double bottoms with ROE after bullish divergence gives you, a lot of things in your corner. So I'm actually done for the day trading ES, so I will miss out on that if it happens. I have a small Facebook trade on, and I'm managing the rest of my trades. So, okay, once again, I did not want this video to be long, and all of a sudden I end up talking for 20 minutes, so I apologize. Let's get right into the markets. S&P 500, there we go. Daily, let's hope we hold the 200. You don't base any trade on hope. It's all about price. You should have reduced, scaled, whatever, protected some positions as soon as you break the 10 SMA, right? I went from 130 down to 80%. Now I'm waiting. I'm patiently waiting. Although I did take Facebook today, so I really wasn't that patient. Okay, so the comp, where's the NASDAQ doing? It was showing some relative strength, and now it's breaking trend. Now, the NASDAQ is not in a downtrend. If we close there, it goes into no trend. The S&P will be in a downtrend if it closes here, but the NASDAQ, if it even closes below the 10 SMA, would be in no trend. which is we talked about, we've been wanting this scenario to happen for a long time because we've been so long in the tooth. XLE. So now you have a double top, and now if you break here, you got an MA top pattern with gaps below. So this is probably something I might, if I'm going to lighten up even more, I'll probably get out of the rest of my ERX because I don't love that pattern. But I might just keep this top in for right now. It is what it is. XLE is not cooperating. XLF not cooperating, coming back down below. That 200 SMA was just too much. IYT fading. Oops. Whoa. Did I pull up the right thing there? IYT. Here we go again. IYT fading. This is in a 5 or 6 day downtrend. It led the whole way up. I was leading the whole way down. IWM, 3-day downtrend. Yeah, don't pick a bottom with these. And yes, if you're aggressive, you can short them. Do I suggest shorting them? No. I think there's enough money to be made in uptrends and bull markets. We're no longer in a bear market. So that's my personal preference. I think traders make the biggest mistake feeling they have to trade both sides of the market. IBB led the whole way up, and guess what? This is a nasty, nasty failure right here. And we have to pay attention. New recent highs came without MACD, and that's telling us something. So all of a sudden, out of nowhere, oil looks not good. Financials looks not good. IWM failing, 3-day downtrend. IYT does not look good. IBB does not look good. UDOW, S&P, NASDAQ as a whole, UDOW or Dow Jones looks fine. Those other ones do not look fine. Gold. Someone asked me about gold today. I mean, there's rules to engage short for the last 5 days on gold, breaking an uptrend line. There's no rules to engage long. Now, can gold bounce because the S&P's a flight to quality type of trade? Possibly. You don't have rules to engage gold, so you have rules to engage short, and that's it. TLT, well, we wanted to come down here. It hasn't yet, so let's just wait. I don't think there's a new trade there in TLT. I do think there will be a nice new one coming up. It's just not here. Okay, let's start going into some stocks. Talk about a sleepy stock. I mean, this stock just fell asleep. Gap, bull flag, our #1 trade. So we got paid on that, 90% club. Awesome. What has it done since? It's done absolutely nothing. This is probably the least volatile I've seen Apple in a long, long, long time. Are we shocked? No. MACD has been heading sideways for over a month. There's zero momentum. So you really need price to get going. It hasn't done anything wrong. It's just hasn't done anything right lately either as far as building momentum. Amazon had a nice, well, I don't know. Were we able to scale? Yeah, I think we were able to scale Amazon. So it's coming back to fill the gap, 10 SMA. Hey, when you're sandwiched between moving averages like there, you got to expect that. Netflix was leading for a while, came back down. We're having a hard time so far finding a good stock for a long Booking, no. Expedia, no. So nothing so far. Tesla looks horrible. Looks like it wants a 52-week low, to be honest with you. Does not look good. Roku looks phenomenal. And we've had, I think, I sent over to my buddy, we have, I think, 6 Roku doublers since they IPO'd. Six Roku doublers. And some of them are up well over 100%. Some of them are up 200-300%. So, yeah, this thing looks like it wants new highs. You got a bull flag here, a bull flag, a bull flag, and a bull flag on top of a bull flag. So you have 4 bull flags there. And, yeah, I think that's going to new highs. So we have 1 leader so far of all the stocks. NVIDIA, no, it does not look good. Texas Instruments, no. Intel. You know what? Intel's holding that moving average. So it looks okay. Korea is breaking trends. Cisco, Microsoft. Some of the dinosaur stocks are holding the 10 SMA, which is good. I'm trying to just think what is possibly going to lead if this market's going to recover late week or next week. Light, that's broken down. OLED, no. Oracle, Adobe. I mean, so far we have Roku. That doesn't look good. Coop, now. Vive, eBay. So these are all either in downtrends, no trends, and it does not. They could be setting up short. Normally wait till we go in a downtrend or at least a no trend for a couple days for like posting some shorts. So they might be setting up. Who knows? The problem with setting up shorts in the week before OPEX is it ends up being a trap. So We might actually wait, but I there's no longs really setting up besides Roku right now. Splunk, YY, NTES. Baidu actually looks pretty good. I would say Roku and Baidu look good. Baba looks fine. Come on. Team, no, SQ. Google. Google looks good. So you got Google, Baidu, Roku, and Facebook. So you got some stocks. That's 4 stocks that I like long. Unfortunately, the S&P, it's going to be hard to focus long when the S&P is in a downtrend. Let's flip to the banks. Goldman Sachs. I'm sorry, there's JP Morgan. There's Goldman Sachs. I mean, they've been asleep. They look like Apple because they're going absolutely nowhere fast. You can't even short them because they don't move. CME. This is interesting. So this stock really hasn't done anything wrong forever. Bullish consolidation, above a rising 200 SMA. And now what's this thing doing? It's doing a double bottom at the 200 SMA. Now, if it reverses here, that's a nice setup because the double bottom came with MACD not at new lows, which is nice. See, the problem with this setup long in here, although it probably paid, was these new lows came with MACD at new lows. So that's confirmation, all right? Now, you could say the same, well, we had confirmation there. Yeah, but if you go back and look at CME for the last 3 years, when it had a confirmation of a new high with MACD, it consolidated and went higher. So, yeah, every once in a while, maybe 10% of the time, you're going to see a new high with MACD, and then ends up, you see a bearish pattern. This ends up being an MA top afterwards, right? So that does happen, maybe 10% of the time in my estimates. But these were confirmed down here. So, you know, if I was to, and I haven't traded CME in a while, but if I was to trade CME, I still probably would wait. I would wait for above here. I would wait for a double bottom to happen. And then, you know, at 183 versus 173, $10, what's that, 7%? To risk 7% to maybe make 20, that's the kind of trade I like. Or when this thing bull flags, you know, up in here, new highs, back in here. Right in here, this is a tough trade. I don't know if I'd take it short or long. I just let it sit, which I have for a while. ICE, CBOE, there's really nothing going on here. Let's flip to oil. Because, you know, yesterday, the CVX actually looked pretty good, and Exxon looks pretty good. And now they just look like horrible again. So let me scan the sector. I don't see anything that looks good. Nothing looks good. Nothing looks horrible. It just doesn't look appetizing for new longs. And then we flip through the casinos, and let's go through the IBB. That is horrible looking chart on Amgen. That's a nasty candle here, breaking an uptrend line, MA top. It's going to be very interesting to see what happens with these biotechs. Guild looks horrid. Jez still looks okay. This was a leader. Lexion now is breaking trend. Vertex just broke trend. Aluminum, ISRG, these stocks were looking phenomenal. They just all breaking trend at the same time. Out of nowhere. I don't want to say out of nowhere because we knew going into the week before OPEX that we knew there's something was going to pull back, right? WWW doing nothing. UBNT, that's paid. I think those options were up 200 or 300%. But they did just break a trend. So we really have lost every type of leadership out there. So what do we have? We had Roku, right? We had Baba. We had Facebook. We had Google. I think we had one more I can't think about right now. Drawing a blank. I think there was one more. Anyway, you can go back in the video and see. So let's just say we got 5 leaders. Well, when the market was showing strength, we had like 10 leaders every day. 10. And we don't have that right now. So when that happens, you know, once again, you're going to see me say the same thing as before, except the opposite. Right? Don't pick the bottoms. If some shorts set up on the ESFL, you do not have to take them. What you do have to do is preserve your massive year-to-date gains because they should be huge. Anytime you see a 40-day uptrend, you should be just on top of the world with your trades. So we just came out of it. So preserve that capital. That's your number one priority in no trends and downtrends. Preserve year-to-date gains in trading capital. I'm going to start putting that on the daily update so it's a reminder. Because it did that all last year. And we went to 11 uptrends last year. We got paid a ton. So right now, what's the focus? The focus shouldn't be the focus list. The focus should be preservation of capital, preservation of year-to-date gains until we get back above the 10 SMA. Don't pick a bottom where the bottom is going to be Thursday, Friday, Wednesday. Maybe there is no bottom. Maybe we just go right down and retest the lows of last year. Who knows? But if you're doing the right thing, which was getting long this whole way up, adding, scaling, and not picking a top, that was the right thing. You should be doing the exact opposite on the way down, right? Trimming, profits, scaling, reducing long market exposure, hedging, and waiting. Being patient, because you don't know how low this thing's going. These might be the lows there. There might be the lows there. They might go here. Who knows? Who cares? Just wait and be patient. You don't have to trade the down moves. You do have to be patient. Protect your year-to-date gains on the down moves and no trends and downtrends. That's all I have for you in the market video update. Have a good day.